10-year note yields end the day moving higher. Initially, we saw yields move lower early in the morning, getting down to 420, but turning things around in the afternoon and seeing them rally back up to 424, where they closed out up about 2 basis points on the session. Taking a step back, 10-year note yields are up about 60 basis points since the middle part of September, so a big move in a not long period of time. Obviously, the market awaiting key data points and key events over the next couple of weeks that could shape or change the trajectory of where yields have been going, including next week's key data non-farm payroll and the week after, obviously, U.S. elections, and then culminating in the November FOMC meeting. So a lot going on, the bond market trying to digest, but seeing yields move higher today, closing out at 424, up 2 basis points on the session. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You'll notice volatility just continues to go higher. It is tracking yields. That's kind of the historical norm. As yields move higher, volatility moves higher with it. Volatility still sitting very close to those year-to-date highs. Obviously, as the aforementioned key data points next week, as well as the U.S. election and FOMC the following week, helping to prop yields or volatility higher as yields move higher. Lastly, let's talk about what we do have next week. We have some very key data points which will be highlighted in by the Fed when they make their decision the following week at November FOMC. We have third quarter GDP, our first look. We also get the PCE data, the Fed's preferred inflation gauge. And then lastly, we have the non-farm payroll, obviously the Fed closely watching the jobs report. So a lot going on, including those data points. We also have 2, 5, and 10-year note auctions coming as well. So a lot going on in the bond market next week, a lot of which could shape policy from the Fed as well as the trajectory for yields. So a busy week in bond yields continuing to move higher today, closing out at 424 ahead of next week's key GDP, PCE data, and non-farm payrolls.